Good afternoon, ladies and gentlemen. Before we get into the specifics of our recommendation, I'd like to ask you a question. Have you ever looked out the window of an airplane mid-flight and noticed the wing bending up and down in the air and wondered, how far can it safely bend? Well, I can assure you that the engineers that designed that plane wondered the same thing. And thanks to companies like MTS Systems, they're able to accurately and precisely test just that. Thanks for coming tonight. My name is James McDonald, and with me I have Whitney Ruckel, Austin Lunsford, Shane Husbo, and Zach Brooklyn. And together we make up one of two teams from the University of Minnesota-Duluth under Professor Joe Martin. On the basis of our fundamental research and our evaluation, we are placing a hold recommendation on MTS Systems for the following primary reasons: macroeconomic headwinds, increasing innovation, and a shifting business model. Next, I'll pass it off to Austin to further discuss the business description of this company.
Thanks, James. MTS Systems was incorporated in 1964 in Eden Prairie, Minnesota, and is a global supplier of high-performance testing systems and relative position sensors. Companies usually come to MTS with unique problems, such as stress testing airplane wings, like James touched on, and as an industry leader at the cutting edge of innovation, MTS is able to provide top-of-the-line solutions for these problems. MTS separates the business into two separate segments, which are the first one being the test segment, which comprises 82% of revenue, followed by the sensor segment, which accounts for the remaining 18%. Both of these segments span a wide geographic customer base, which is separated into the Americas, Europe, China, Asia, along with the rest of the world. MTS primarily conducts its operations in the United States, while with additional locations globally in Europe and Asia. MTS also outsources select operations to foreign companies in order to reduce costs and better compete on price. I'm now going to pass it off to Shane to touch on our first thesis point.
Thanks, Austin. Because MTS Systems is an international company, they're faced with macroeconomic headwinds. The two that we'd like to highlight today are the slowdown in global GDP growth and the continued strong dollar environment. First, with the global slowdown in GDP growth, we see this affecting MTS Systems growth opportunities going forward. Additionally, fluctuations in foreign exchange currency rates have negatively impacted the financial performance of the company, and we see this continuing into fiscal year 2016 due to the company's current hedging strategy, in addition to their exposure to the yen, the euro, and the won. I'd now like to pass it over to Zach to touch on the competitive landscape.
Thanks, Shane. MTS competes in a highly fragmented market that is characterized by high barriers to entry on account of its capital and intellectual intensive nature. MTS has traditionally excelled at producing solutions for a niche market that demands unique, first-of-a-kind solutions and a quality of product that is unrivaled. In addition to this, MTS also focuses a small portion of its operations in producing standardized, higher-margin products. However, these products have not traditionally been the core competency of the company, and as such, they struggle to compete with companies such as WIC that focus almost exclusively on the production of these standardized testing solutions. Due to MTS's dominant position in the production and services of their customized solutions, MTS has seen an increase in the custom orders volume. This has resulted in a slowdown in the backlog conversion rate on account of the extended assembly cycle that is associated with the production of these customized solutions. Next, I will pass it on to Whitney to further discuss the demand drivers of the backlog.
Thank you, Zach. This brings us to the second point of our investment thesis: increasing innovation and trends in R&D investment. Encouraging innovation to support economic growth remains a key focus of government policies, with policy objectives targeting increased investment in research and development. In particular, industrial companies are increasingly investing in more complex and technologically advanced machinery. So, increasingly complex machinery equates to increasingly complex testing equipment to test that machinery. This is why we believe that this serves as a primary demand driver for customized testing solutions, and also provides a platform for growth in the test services business. I will now pass it off to Austin to talk about how the company is streamlining their operations to take advantage of this trend.
As Whitney highlighted, R&D spending is the true demand driver for MTS Systems. Future growth is dependent on their ability to capture opportunities and also convert their backlog into revenue more efficiently. Which brings us to our third and final thesis point, the shifting business model to improve on operating efficiency. Management has shifted its focus to improving operational efficiency through investing in its business by means such as increasing engineering headcount and IT infrastructure. This is anticipated to expedite backlog conversion and foster growth in the test and services area. I will now pass it back to Whitney to touch on financial analysis.
We believe that these operational investments will be highly beneficial to the company going forward. The acceleration in backlog conversion, as well as growth in the test services business, will drive top-line growth. In addition, as operational efficiencies begin to take effect, we expect to see an expansion in margins and an improvement in working capital. Further to this point, we want to touch on the company's history with strong return on invested capital, currently at 15.5%. This is well over the industry average of 9%. And given that management's compensation is determined on ROIC, this provides us with further confidence in the performance of these investments going forward. I will now pass it off to Zach to further discuss the financial analysis.
Thanks, Whitney. MTS has generated strong cash flows while maintaining a healthy balance sheet. The company has grown its operating cash flows at an 18% CAGR and free cash flows at a 20% CAGR over the past 5 years. This is largely due to an increase in funds from operations as well as improvements in working capital management. The company also does not have any long-term debt positions, resulting in solid liquidity ratios. As a result of this, we believe MTS Systems is a financially sound company. Management uses its excess cash to return value to shareholders in the form of a share repurchase program as well as dividend payments. The company has historically used 60% of its free cash flow to fund the share repurchase program while maintaining an average dividend payout ratio of roughly 35%. Next, I will pass it off to James to walk us through the valuation.
Thank you, Zach. For our evaluation, we used a discounted cash flow model as our primary method to calculate a one-year target price of $61. The primary revenue drivers in our model include growth in orders and backlog conversion rates. The terminal growth value we calculated of 2.7% was calculated with respect to the current state of the global economy, GDP growth in key regions, and the mature market positioning of the company. The weighted average cost of capital we used is 10.98%, which is significantly lower than the company's return on invested capital and suggests that growth is adding value. Additionally, we used a Monte Carlo analysis that ran 1,500 return scenarios to generate a mean price target of $55. Our DCF price target is approximately 1 standard deviation above this mean. Next, I'll hand it over to Shane to discuss some of the risks that we haven't already touched on.
Thanks, James. We've outlined 4 additional risks to the company, starting with our uncertainty in management and their growth targets. Although we think management has taken steps in the right direction, we are uncertain of management's growth targets due to the fact that they're going to continue to face macroeconomic headwinds, and additionally are making large changes within the company that we do not see materializing in fiscal year 2016. The next risk that we'd like to highlight is their innovative, first-of-a-kind products. Although innovative, these first-of-a-kind products expose MTS Systems to risks associated with the pricing and the delivery of these products. MTS Systems also makes their software in-house, which provides a large competitive advantage to them. However, if they were not able to protect this intellectual property, this could be detrimental to their business going forward. Our final key risk is the computer simulation industry. Although computer simulation would never fully replace physical testing due to its linear nature, we do see the fact that it could potentially cut into MTS Systems' market share going forward. I would now like to hand it over to Austin to wrap up our presentation.
Thank you, Shane. So again, we are placing a hold recommendation on MTS Systems with a one-year price target of $61 based on our 3 main thesis points: macroeconomic headwinds, increasing innovation, and the shifting business strategy. We sincerely thank you all for coming out tonight and would like to open up the floor to any questions.
Thank you for your presentation. I had a financial modeling question. You've got operating margins expanding pretty nicely here in the next couple of years, and you talked about the driver of that would be improving your operating efficiencies. Wondering if there's 1 or 2 things that
Well, one thing one thing that we think is definitely the investment that they put into the company, and like the IT infrastructure, well, the IT infrastructure too, but especially the engineering headcount. It takes an average of 1 to 2 years to train these engineers in order to become competent enough to significantly improve operations, and we believe that that will take some time. So that is one of the issues we see associated with the growth targets.
I just want to be clear, was that question pertaining to both gross and operating or just operating margin?
They're pretty linked, so yeah, you answered it correctly. Thank you.
So MTS derives a large percentage of the revenue from selling tester sensors to ground vehicles, if you're using it as such. And we've seen U.S. auto sales increase from 2010 to 2015-16 pretty significantly up to pre-crisis levels. However, it's likely that may plateau. What do you see the company being able to do to weather that type of scenario, given that potential to revenue?
I'm sorry, can you repeat the last part of the question?
Yeah, just trying to get a feel for if we do see U.S. auto sales temper off a little bit or plateau, given the large percentage of revenue that MTS sees from that type of industry, what type of thing can they do to weather that?
Right. Well, MTS revenue is not primarily dependent on auto sales. It's dependent on changing innovation within the auto industry. So the demand for, say, test equipment comes from when their customers need some kind of different functionality from the testing equipment. So that's new models. We see the environmental regulations and restrictions on CO2 emissions and just the general concerns around resource allocation and energy scarcity. We believe that even if auto sales were to turn down, there's still a market for the testing solutions.
Thank you.
So after you're studying the company and your understanding of the company's strategy and its financial structure, what advice would you give management to do things differently to create more opportunity for the company and its shareholders?
We actually see management taking steps in the right direction, and again, we just see that taking time for these investments to pay out. We really like where they're going with the company by recognizing that servicing is a key aspect to begin monetizing, as they haven't done that in the past. Additionally, we've seen them take large steps in the areas of IT infrastructure and again, the engineering headcount.
Another thing that I just would like to mention with that as well. So basically what we see as far as their leverage position, MTS's engineers are in a position where they have all the resources that are necessary for them to run through this backlog and start converting it into actual revenues. But the constraint here really is the intellectual power of their engineers. So that is what the growth of the company going forward really rests upon, is the time that it takes to really start getting these guys up to speed.
Can you talk about management compensation and what are the short-term and long-term incentives, and then whether or not you think those are the right incentives that they should be evaluated on?
Yes. Well, I'd like to say first off that I do believe that they are the right incentives, as roughly 55% of their compensation is through stocks, and half of that is based on their ROIC performance, which is why they have a really nice return on invested capital. So that's through stocks. On the other side, 35% roughly of their revenues is a base salary, which is competitive to other executives at similar firms. And the remaining 10%, 2% of that is perks and rewards, or perks and benefits, excuse me. And the additional 8% is short-term incentives, such as orders, revenue, and net income. And that's a cash reward based on short-term incentives. So I think they have a nice balance of both short-term and long-term incentives with a heavier emphasis on the long-term.
Hey guys, it seemed like you guys spent some time looking at the company's competitive position. Can you just maybe highlight some of your findings there? What were the more important factors in determining that? And also, did you factor that company's competitive position into your evaluation framework, and if so, how? Thank you.
Yes, so basically to touch on the competitive positioning, due to MTS's extremely unique business, they have very few competitors that they actually compete with. Within the standardized that I touched on, they do struggle to compete with companies such as Zwick and other companies that can compete on the standardized products. However, with the customized solutions that MTS produces, there really is no company that rivals them. Because of this, we found it very difficult, seeing as it accounts for about 82% of their revenues, to really compare, to get a solid peer comparison that we think can provide a strong insight into how they actually compare as far as the financial performance and the financial aspect of the company. If that kind of further, or if there's something you want me to clarify as well.
No, that's good.
Okay. In terms of the financial modeling, so as Zach highlighted, MTS Systems really, their competitive edge is in the very highly customized, first-of-a-kind, unique solutions. These are large, complex pieces of equipment that take a lot of, they're very intellectually and engineering intensive, right? So going forward, we mentioned how the company is trying to drive growth in the test services business. And historically, 20, 30 years ago, the company actually taught these other engineers how to recalibrate and service their own equipment once it was sold. Well, given now that they have this high custom backlog, they're actually taking advantage of that to leverage growth through services, because nobody else is better to service these complex machines than the ones who designed them. So in the financial modeling, we expected some growth in the test services business. It does not operate in and of itself as a separate segment. The company still operates as test and sensors, but the services is tucked within that test business. We also anticipated some growth in test services will add a recurring component to revenues to help kind of level out revenue streams. So I guess increasing predictability and growth into a new market is what we considered in that aspect.
You all were able to go into the management on the analyst day. I'm wondering if you did any additional research on the company or background, and then also if you get a feel for management's track record on whether they've been too optimistic or too pessimistic on some of the milestones that they put out there in the past.
Oh yeah, to touch on the first part of that, we talked to the former engineer for MTS Systems, Mr. Eric Bukowski, and he was able to talk to us about their competitive positioning a little bit, or more so the power of suppliers. He was telling us how with MTS's very unique business, they demand very unique suppliers as well, so they hold that information very close to their heart, and it would be a competitive disadvantage for them to release that information to other people. And then if you want to touch on that.
Yeah, we have seen management, at least with this year, as being relatively optimistic. We've looked into former companies that they've been involved with as well, although mostly private. Dr. Graves was with C&D Technologies, and it was public for a brief stint of time, in which we've seen a history of optimism. So that's where we really derived that going forward with management.
Oh. And to further touch on some additional research or channel checks, I suppose, that we did, we were able to get in contact with the former Chief Financial Officer of MTS Systems, Sue Knight. She was the CFO for 13 years prior to Mr. Oldenkamp stepping in this year. And with respect to the optimism of management's growth targets, she does agree that they're taking the right steps, but she also believes that there are definitely some key things that management must execute very well on in order to obtain those growth targets that they've set forward.
And Sue was still there. I'm wondering, you said they are an innovative leader, a market leader, that good growth prospects. Target price is 61, the stock is 53 or 54. You got a pull on it, why not buy? Sorry, I'm going to give you 25 seconds.
So given the recent market environment, with the sharp drop-off at the beginning of the year, we believe that MTS is undervalued right now. However, we believe that they are undervalued, slightly higher valued than other firms in the market, because due to the current position of the U.S. equity market.